Today, the latest CPI numbers came out, and the market took that positive because it was well within expectation. As you can see, the Nasdaq 100 gained over 2%, 2.32%, and 276 points. And the Nasdaq Composite, 239 points at 2.14%. Russell 2000, 1.87% at 32.5 points. S&P 500 gained 64, almost 65 points at 1.68%. New York Stock Exchange Composite gained 1.22%, 180 points, and the Dow Jones Industrial gained a little bit over 1%, 336 points. But the Dow Jones Transportation was the worst performer. It was down 0.38% or 53 point, almost 54 points. And looking at this intraday chart here of the S&P 500 and some of the internals, this is a 3-minute chart here. You can see that the S&P 500 gapped up today and kind of got to a peak, the high of the day, somewhere around 11:30, 11:40. And then it started to fade and until it get to almost 45 minutes to the closing bell. Then it made a low of the day. And half an hour before the close, we see this run up. And this is probably due to the recent zero DTE, OPEX, that kind of stuff. But looking at this up-down volume ratio here, you see today it finished at 2.3. It was actually much higher than that at the beginning, but you can see that it's kind of got weakened as day progresses, and also the advanced decline also closed down slightly below the peak here that was up over 2,000 area, 2,020, 2,200 plus. So it closed the day at somewhere around 1,500. And also the VIX kind of still inside of this 20-30 zone. And the put-call ratio is still up at above 1. And the advanced decline, the new high, new low, there were 223 more new 52-week low than new high in the New York Stock Exchange. If you like the content in this video, be sure to smash the thumbs up and help promote this video. And if you are new to this channel and you'd like to continue to watch contents like this from me, be sure to subscribe and also turn on the notification icon. And looking at this cumulative AD line for the New York Stock Exchange, as you can see, it came up a little bit, but it's still moving down. Likewise with the S&P 500. So we are not seeing any divergences right now. Same with the Nasdaq. We also looking at the Nasdaq cumulative AD line coming down, kind of come up a little bit today. And also the Nasdaq 100, again, we are not seeing any divergences. Now look at this market profile here for the ES. We see that today it finished with a poor high here. And also in addition to that, it resolved these single prints today and partially resolved some of these single print here. So in the coming day, we could expect to see possibly come up and resolve these single prints, and also might come up to this point of control up here, or it could come back down and tag this point of control at 38.97.5. So basically what we're looking at, if we just kind of zoom out a little bit and see here, you can see that there are a couple of these balance areas that are of interest that we're keeping an eye out. One is here, there's somewhere around 440 and 340, this balance area here. So it is look like it's creeping back into this balance area. And here's this last FOMC meeting, 4073 level. So keep an eye on this. If it could come up to this 440 and break through this 440 and come back up and retake this 4073, then we have another balance area here that is somewhere around 4100 and 4150 area, 4150, 4160. So that could also be in play if it retake this 4073. Now, if it unable to get above this balance area and start pushing it back down, then we could see all these down here, these poor structure from last year and beginning of this year to get resolved. So keep an eye on these levels here. Let's take a look at this candlestick chart for the ES, the emini S&P 500. The upper range for this week is 40.30 and 40.23. So that's the range for the upper range, and 38.04 and 37.70 for the lower range. And right now it is sitting right at this zone here near this 3970 area, and we're on this high here. So remember the 3040, I mean the 4040 area that we looked at, about that balance area on the market profile chart. So this is the confluence here. We got this trend line that is coming up here, and we also have this weekly upper range, and also this point of control, this composite point of control here. So watch for this possibility of getting rejection when you get up here, if it move up to that 40 area. Now on the downside, we're basically looking for a potential rejection from here and come back down to this lower, this low volume zone here near this 3831, and then possibly get into the lower range of the expected move at 3800. And before we look at Apple and Tesla, I just want to remind you, if you'd like to see my analysis on all of these FANG stock, be sure to go check out my Substack page at smtraderca.substack.com. I put this out on a weekly basis, so check them out. Now let's take a look at the couple FANG stock that have been holding up the indexes. And the first one is Apple. You see Apple is holding right at this level here at 147.83 on Monday, and today it continued to push up to this 153 and getting close to the upper range of the expected move between 155 and 154. Also, it is inside of this balance area. So if it could penetrate through this upper range, then watch for this 157.47 area and see would it be able to push through. Then it get up to this 160.54, then it will be basically retrace the upside, the upper portion of this balance area. Now, if we see Apple get rejected and come back down and dip below this composite point of control, then watch this 147.83 zone. And if it dips below that, then look for the lower range to get tagged. And that would be between 143 and 141.30. Then it will be starting to retrace back down to this 138.55. The lower half of this balance area. And looking at Tesla, came down to almost to the lower range of the expected move, which is between 161 and 160 for this week on Monday, and came back up today and trying to tag the upper range today, and that is between 190 and 185.20. So as you can see, they are trying to hold Tesla while they push around Apple to move the SP 500 and the NASDAQ up and down here to kind of assure people that the market is doing okay. But in reality, it wasn't, because yesterday we have more decliner than advancer, and so it is a basically a little smoke and mirror. So be careful, guys, because right now they try to calm everybody down because of the Silicon Valley Bank collapse. So be careful. Right now, we're basically looking at Tesla to see what if able to continue to push up and get up to this upper range, and also the composite point of control. The upper range is between 190 and 185.20 for this week. So we'll see what if able to get up to this 195 area on the upside. If it doesn't and come back down, then look for the lower range that is between 161 and 160. You see with a whole support here. If it breaks, then we are looking at this 146.41, and that would be coming down to fill this little gap here. So by the way, if you want to see how I set this up and how you could get access to this fixed range volume profile in TradingView, be sure to watch this video that I put out and go and follow that, and you can see how I set this up and how I use this composite volume profile to help establish some of these zones. In IWM, the ETF for the Russell 2000, we see yesterday it almost came down to this zone here at this 170.75. Today it got a nice bounce, but unable to get into this area here, this high volume area. And instead, it just kind of hanging around right at this low volume zone here. So tomorrow we'll see will it be able to get back above this and try to get back into this balance area and work its way up to this upper range of the expected move, which is between 184 and 182.90. And if it doesn't, and it come down and dip below this 176.59, then we'll be looking for retracement of this balance area, and that will brings it down to 170.75 and possibly into the lower range of the expected move, which is between 169.50 and 167.50. And looking at the QQQ, the ETF for the NASDAQ 100, you see the QQQ is almost up here at this upper range for the week, and that is between 299.60 and 298.10. So right now, we are looking to see would it be able to come up to this trend line, get into this zone here, and that would be somewhere around 304. Or would it get rejected and pushes back down and dip below this composite point of control here and come back down to this 284.59 and possibly come back into this 280 and tag this lower range of the expected move between 278.20 and 276.50. Now looking at this SPY, the ETF for the S&P 500, notice the upper range for this weekly expected move is somewhere around 398 and 397, and the lower range is 374.50 and 371. So right now, we're basically looking for the possibility of DC would be able to come back into this high volume area. And if it does, then we'd be watching for the possibility of come up to this area here near this composite point of control, somewhere around this 398 or the 400 area, basically. So that would be the upside that I'd be keeping an eye on to see would it be able to come back in and stay inside this high volume area and work itself up here for a potential test of this point of control. And if it get rejected back down, the first level that I will be watching is 387. This little bit of a low volume zone here for potential support. Is they see that it came down today and got a bounce off of it. So we're going to most likely see a back test of this and see would it be able to hold. And if it doesn't hold, then look for this 378.70 area here on this zone here. And if that doesn't hold, then we'd be looking at the lower range of the expected move to get tagged, and that would be down here at 374.50 and 371. Thank you for watching and stay safe.